All right, today we're digging into the massive IPO from one of India's industrial giants, JSW Cement. They're asking the public for billions of dollars, so, we're going to break down their pitch to see if their foundation is as solid as their concrete. It's a huge question, right? But it really gets to the heart of what the cement industry is all about. I mean, every road, every bridge, every single home, it all depends on this stuff. So when a huge player like JSW Cement decides to go public, they're really asking us to put a price on their piece of that future. So just how big is this bet? Well, the numbers are frankly enormous. But the real story here is why they need all that capital and exactly what they plan to do with it. Let's get into it. Okay, so here's the game plan for this explainer. We'll kick things off with their big green story. Then we'll get a snapshot of the company as it stands today. We're going to follow the money to see their huge expansion plans, break down the IPO deal itself, and, this is crucial, we'll look at the red flags that they themselves have had to disclose. All of that will lead us to the one big question you should be asking yourself. So first up, what's the core story? I mean, why go through all the trouble of a massive IPO? Right here, right now. When you boil it all down, this IPO is about one thing: growth. But it's not just any old growth. They're funding a very specific vision to absolutely dominate the market for sustainable or green cement by dramatically scaling up their operations. Okay, let's zoom in and get a clearer picture of the company itself. Who exactly is JSW Cement? Well, first off, they're not a startup. They're part of the massive JSW group, which gives them instant brand power and, industrial muscle. Second, their whole calling card is this green cement, which is made using slag, a byproduct from steel manufacturing. And third, they have this absolutely sprawling distribution network all across India, supplying everyone from local home builders to massive national infrastructure projects. Now, this is where it gets really interesting. This slide puts some hard numbers on that green claim. According to their own prospectus, JSW Cement's CO2 emissions are less than half the average for their competitors in India and around the world. That's not a small difference. This is a central part of their identity and their pitch to investors. And who's buying all this cement? Well, look at this. The market is overwhelmingly driven by just fundamental needs. Over half of it goes into housing, and another 30% is for national infrastructure. This really just underscores how essential the industry they're in is. So where is all this IPO money actually going? Let's follow the cash, because it's pretty much all earmarked for some seriously ambitious expansion projects. This number right here, it says it all. JSW is planning to more than double its production capacity. And just to be clear, we're not talking about a minor upgrade here. This is a complete transformation of their entire manufacturing footprint. It's a huge bet. And a huge piece of that expansion is this: a brand new, from the ground up, cement plant in Nagaur, Rajasthan. As you can see from the timeline, this isn't just a dream on a PowerPoint slide. It's already happening. The work's begun, and it's scheduled to be finished in mid-2026. This makes their growth plan feel very, very real. Their whole strategy also lines up perfectly with what the market is doing. Demand for their key green ingredient, that's ground granulated blast furnace slag, or GGBS, is projected to almost double by 2030. So they aren't just hoping for a trend to catch on. They're betting big on a trend that's already well underway. All right, now for the part everyone wants to know about: the financials. How is this deal actually put together, and what can we figure out about the potential valuation? Okay, first, a quick but super important definition. A fresh issue means the money goes directly to the company for things like growth and paying down debt. An offer for sale, or OFS, means the money goes to the existing owners who are selling some of their stake. It's really crucial to know where the money is flowing. And here's how it all shakes out for JSW. The total IPO could be up to 60,000 million rupees. Now, look, the majority of that, 40,000 million, is a fresh issue. That money goes straight to the company's balance sheet. The other 20,000 million is for the existing shareholders, like the promoter group and some early investors, to cash out a piece of their holding. So, what about the actual share price? Well, the final IPO price isn't set yet, but the company's own documents give us a really fascinating clue. It shows that some major investors recently got their hands on shares for about 65 to 69 rupees each. This gives us a powerful benchmark, a yardstick to measure the final IPO price against when it's announced. Now let's look at the competitive landscape using the data from the company's own filing, and you can see a really clear picture here. Unlike its main rivals, which are all highly profitable, JSW Cement actually posted a loss per share in fiscal 2025. It also carries a pretty significant amount of debt, while a couple of its competitors, like Ambuja and Shree, are actually sitting on net cash. This is such a critical piece of context for their whole growth story. Okay, to get a full picture, you can't just look at the shiny stuff. You have to look at the risks. And the best place to find them is right inside the prospectus, where the company is legally required to lay it all out for potential investors. And the company is pretty direct about the challenges. They call out their substantial indebtedness and the fact that this business just eats up tons of capital. They also have to disclose some ongoing litigation, including show cause notices from the market regulator SEBI that involve members of the promoter group. And of course, they acknowledge the real risk of delays or cost overruns in those huge expansion projects we just talked about. So after all that, what does this all add up to? What's the final takeaway here? It really all boils down to this one core idea from the company. They are funding today's massive expansion with this IPO because they believe they can become the dominant green cement player of tomorrow. This whole thing, it's a bet that sustainable construction is about to become the new standard for the entire industry. And so that's really the trade-off, isn't it? On one hand, you have this compelling vision of green growth, all funded by this IPO. And on the other, you have the stark reality of high debt, current losses, and the very real risks of a massive, complex expansion. JSW is betting that green is the new cornerstone of construction. The big question for any investor is, will it be the cornerstone of their portfolio?